Hello everyone, how's it going? In this video, we're going to talk about Alibaba and we'll cover three prominent investors who recently sold their shares in Alibaba, including Manish Purple. And towards the end, I'll also leave you with a bull case scenario, one tailwind that Alibaba is enjoying, and I believe it'll continue to help it over the upcoming years. So we'll cover that towards the end. Number one, we're talking about Long River Investments. And the reason I'm bringing this gentleman up is because he specializes in China and all his business, and he understands the Chinese economy very well. And he was a very big bull of Alibaba at one point. Now, no longer, he's basically sold it off, but he gave some very good points about why he felt that Alibaba was not the very good investment that he thought initially. This gentleman enjoys or brings up or gives out an annual growth of 24.2% on his investments since 2016. You're basically doubling your money every 3 years or so if you were invested with Long River Investments. And he came out with his letter to investors. He spoke about how he sold out of Alibaba. He writes, the most material changes were selling out of Alibaba, but he increased his shares in Tencent. Now, he wrote this article called Alibaba at Crossroads, where he explained how Alibaba enjoyed this huge growth in the Chinese economy and the very good business model it had, but now it's running into these problems. The bearish reasons that it gives out on Alibaba is one, the regulation. Then he also talks about some competitive advantages that other companies are enjoying. But now this is the thing. He talks about how the CFO. So we know the Chinese regulation is coming up on Alibaba and they're imposing all these mandates on them. In addition to satisfying all those mandates, they're also going above and beyond to satisfy all the regulations. So they're talking about how the CFO Maggie Wu spoke, reducing the fees and charges to help merchants and brands. At the same time, also invest and spend more for them. So the impact is going to be both reflected in both the top line and the bottom line. So they're doing above and beyond to help that economy growth overall for the social prosperity. At the same time, it is also talking about the competition, the other businesses that are erupting in China and they're growing like anything. He's talking about how Pinduoduo, he felt Pinduoduo would not survive initially because of Alibaba, and Alibaba might basically come kill the competition at some point. But he was proven wrong in that analysis, and he said in just 18 months after my post, it reported an astounding 780 million annual active buyers, 2 million more than Alibaba. So they basically explained and showed that how Pinduoduo and all these other companies that are coming up, they're trying to take away that market share. And again, Tencent holds a big hold of Pinduoduo. He also talks about the cloud aspect, the Alibaba cloud and the other cloud businesses, the e-commerce side from the cloud side, and how the revenues has also been reducing. Not the growth is not there as it used to be in the past. And he talks about how the cloud is an issue, where yes, when you're working with Amazon here in the United States, it's a different economy. Here the cost of labor is high, and companies would want to do things on the computer. Companies would want to do cloud and AI and bring in more automation because the cost of labor is pretty high in the United States. But out in China, the cost of labor is opposite. It's very less, and it makes sense to employ labor workforce rather than computers. So there is not so much of incentive for the people to move onto the cloud or move onto the computers or automation. You can still survive using workforce out in China. Then you have Lilu from Himalaya Capital, and he also has a very strong foothold in China. He understands the Chinese business very well. So this gentleman had basically invested in Alibaba back in the Q1 of 2020, and he sold out of back in 2022. So to be in Q2 of 2020 is when he sold out of Alibaba. He's a gentleman who is very close to Charlie Munger, and Charlie Munger, right, in 2021, he bought, and then he increased his later this year. And Lilu and Charlie Munger are very close. Charlie Munger has only 3 investments in his whole portfolio is into 3 companies, and one of them is with Lilu. That's basically the philosophy of Charlie Munger. And Li Lu has helped increase his money about 10 times. The investment that he had given to Li Lu made it to 10 times. So those guys are very close. And there's one theory, and the reason I brought that story up is because even though Li Lu sold it out, you could still see Charlie Munger buy Alibaba in the first quarter of 2021. So some speculation to look into that. Now, there is one assumption or there's one speculation, and there's no hard facts to prove this, and we could be wrong on this. There is saying that Li Lu might have sold the American version of Alibaba and bought Alibaba on the Hong Kong exchange, just to avoid, if in case there was a deregulation or something. But again, that's a whole speculation thing, and it could not be true. Next, you have our Manish Purple, who recently made news by selling 77 to 80% of his stake. We don't know until he talks about it, and anything we say would be just speculation. But I have this video that he spoke recently in one of the Boston College's interviews, and he spoke about his understanding of Alibaba. I'll leave you with that.
Alibaba clearly had some stumbles with different actions that were taken against the company. Many of those actions might be justified because many of the ways that the company did business might be illegal in the US, for example, in the way they kind of restricted things and so on. But I think that at the end of the day, it has a very talented management team and it has a very dominant footprint in the minds of its consumers. I think the business will do fine. And they're pretty smart about the way they go about it. I don't think the model is as good, in my opinion, as a Tencent. But they both can do very well. I would say that better than Tencent or Alibaba, because these are very large, market caps. Probably businesses that will do a lot better in China are businesses today that may be private, or businesses that may, be worth less than $1 billion or less than 100 million, where their runways are huge and they've got competitive advantage and they can grow 100x from here. And so I think that if I were you, I would focus. I have a handicap. I can't do that, but it'll be so much outside my circle of competence. But I think that if someone can really figure out a bunch of smaller businesses in China that have great management and great models and teams, then that is where a lot of wealth will get created in the next 10 or 20 years. I mean, what I'm saying is that no matter how well Tencent or Alibaba does, it's hard to see them get to valuations more than 10 times where they are today in some reasonable number of years, if everything goes well. So I think you're better off rolling up your sleeves and digging deeper into the Tencent and Alibabas of tomorrow.
Now, coming to the bull case, this is the number of annual active consumers across Alibaba's online shopping properties, and this was later towards 2020, 2021. And you can see this growth that's happening. And we have the numbers starting from 2016, where they had about 434 million, and most recently, they have reported up to 828 million active users on Alibaba. And this is the number of active internet users in China from 2008 to 2020. And you can see this growth. This growth and this growth, you can see a very close resemblance of what's happening here. And the population of China is about 1.4 billion. So you still have a good chunk of people who are still not on the internet and who still not used retail on the online e-commerce place. So basically how internet grows into the Chinese economy, Alibaba will grow accordingly. And yes, you have companies like Pinduoduo and JD and all the other e-commerce businesses that are erupting in China, but at the same time, people would want to buy from Pinduoduo, people would want to buy from Alibaba, people would want to buy different aspects. Alibaba has a different business model, Pinduoduo has a different model, JD has a different business model altogether. So this is something interesting to keep an eye for. This is one of the tailwinds that Alibaba will enjoy. But again, this is all speculation. These are assumptions, and we could be wrong. But do your own research. Think about it from your own perspective. With that, take care. Stay safe. Bye bye.